Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good to have you back on.
Happy to be here.
Well, Wall Street ended last week on a note of serious uncertainty, a massive drop on Thursday, then another drop on Friday. Korean stocks recovering today, though. What's the story in the markets?
Okay, well, let's take a look at the U.S. stocks first. The Dow Thursday and Friday combined went down by 3.3%. S&P went down by 4.3%, and NASDAQ went down by 6.2%. But this brings the stock indices to around the level, ironically enough, all three indices around the same level that it was on August 21st. So they perhaps lost about 2 weeks worth of growth, which in terms of the entire year is not that much. But it was the worst fall since June for Dow and S&P and since March for NASDAQ. And it comes right after S&P and NASDAQ had record highs. So it seems that the investors are getting very nervous. A lot of people, including myself, were saying that this rally doesn't seem to be that justified. And I think that nervousness did play into the correction in the market. The biggest losers in the fall were tech companies like Apple, Facebook, Amazon, Microsoft, Google, Alphabet. And why did it fall at this particular time? What news was the trigger? No one really knows. There was the unemployment news on Thursday, but it wasn't that bad. It fell from 10.2 to 8.4%, which was actually, it fell more than expected, which should have been good news. Coronavirus is still bad in the U.S., but it was not worse than usual. There's sort of a conspiracy theory going around saying that SoftBank of Japan bought a lot of call options for tech stocks, and the prices were driven up because these option sellers were needed to buy stocks to cover the option if the option would be exercised. But there's a lot of a question on whether that is true or not. SoftBank isn't saying. And then some analysts are saying September and October are cruel months for stock market anyway. And then some other analysts are saying this is increased instability due to the upcoming U.S. elections. But basically, no one knows why it fell at this particular time. And again, even though it seems large, it only cost about 2 weeks worth of growth. So everybody's assuming that the growth will continue eventually. It's just how far it's going to drop until it starts rising again. The other markets, European markets, Japanese markets, they followed the American trend. Most of them fell since Thursday. Korea was the exception. Korea did actually, the Korean stock indices, KOSPI and KOSDAQ, rose on Thursday when the U.S. markets fell. It did fall on Friday, but today it recovered again. So Korea is sort of the exception to the rule in the global stock market. And again, it would seem to have been driven by Korean individual investors. The foreigners and institutional investors sold.
Well, zooming out a bit, Professor, we've seen a pretty significant decline in oil prices the past few days. Tell us about that, and what's your outlook?
Okay, well, from the local high of $43.39 on August 26th, the West Texas Intermediate, which is the standard for these things, fell about 8.3% to $39.77 on last Friday U.S. time. This is widely attributed because, first, the global economic slowdown, the lack of demand is likely to continue, and then during July and August, the gas prices, oil prices did rise, and that caused an increase in production, especially in Russia and U.S., and inventories are still on the high side. So that is attributed to the price fall. The demand is not that high, and it's for the United States. It's Labor Day this Monday, so the driving season is over, and so the oil demand is not likely to increase. Saudi Arabia has cut prices for Asian buyers by $1 per barrel in the last week, which also contributed. And at least for now, until coronavirus seems disappears or at least goes under control, it's not likely that the demand for oil will rise very much. So we might be stuck in a period of low oil prices like it was during the spring.
Well, it is the start of a new week, Professor. We should be getting some data on employment from the Bank of Korea and other kinds of data. What's on your radar in the days to come?
Okay, well, the biggest economic news for Korea will be what is the government going to do about the economic stimulus plan, including the second emergency relief program. The government has signaled that this time the relief payments will not go to everybody, but people who were hit by the coronavirus, and they seem to be concentrating on small business owners whose revenues have been cut because of the lockdown and social distancing measures that Korea has undergone in the last couple of weeks. But the criteria has not been concretely set yet. That's due to be announced, and there has been a lot of controversy on exactly who's going to get the relief payments, and also whether the relief payments should go to everybody like they did for the first payment. So there's going to be a lot of political controversy, and the government should announce the rule as quickly as possible. It's due sometime this week, but no one knows quite when. And then some interesting statistics coming up. Employment figures for Korea for August should be up on Wednesday, and Ministry of Economy and Finance should announce government budget trends on Tuesday. Globally, European Central Bank has a monetary policy speech this week, and U.S. Consumer Price Index for August should be out this week.
All right, we'll be watching all of that, and we'll have to catch up again later this week. Thanks so much, Professor.
Thank you.